Most traders don't understand how to effectively use the weekly range when swing trading. So that means they're on the 4-hour or maybe the daily, getting chopped up in price action instead of just reading what the monthly candle is telling you and how you should trade it. So I want to run through 3 ways that I use the weekly range to get into high probability trades, like this 3.5R that played out on AUD CHF. And this is a classic CRT. So the first application of the weekly candle range that we're going to use is a classic accumulation, manipulation, and distribution price formation. So I'm on the 12-hour price action. I like to use the 12-hour for swing trading, and I'm going to overlay the weekly candle. So in this particular scenario, you see price is manipulating below a weekly candle range. So you see this whole weekly candle range right here is a bearish weekly candle range. So I'll mark it in red. So price sold off during this particular week. In the next week, what price did is it continued lower, liquidating the low of its previous candle right here. So we get a liquidation and then a structure shift where we close above this swing point. So the natural next stage for price is to target the high of this weekly candle right here. So we can mark that as our target. Now, how do we actually trade this? So from a price action standpoint, price sold off, creating a bearish range, accumulation candle. Price then came into internal range liquidity and liquidated the previous candle. We then saw a structure shift. So if I was to zoom in right here, we can see that price traded straight through this swing point. So that is your true market structure shift. And what we leave is a 12-hour order block right here. So I can mark that as a 12-hour order block. We also then get the close of the candle and the formation of a new 12-hour order block. So we can see that demand is in control of this market through the formation of these order blocks. So if you were to take a trade from the order block, covering the swing point, the low, and target the opposing end of the weekly candle range, that plays out for a 2.59R trade. So that's one way that you can use weekly candles to get involved in high probability trades. But there is much more to it, because if we just then go up a time frame to the 2-week candle, what we see is that we can use the second half of this 2-week candle, second week, as a timing trigger to target higher targets, because not only are we liquidating this weekly candle range, we're also liquidating the 2-week candle range. So we can mark that as a 2-week CRT potentially, where the target actually becomes this high right here. I won't go up a time frame again because we then have monthly targets, but essentially it means that you can hold your weekly CRT trades for longer. You get a 3.28 to the 2-week high, and if you hold to the highs at the top of the range, you've got a 2.87R swing trade. But there is much more to trading weekly candles. So if we go back to this weekly candle range and we see that the trade has played out. So I'm just going to take away the noise here, and we're going to look at what is actually happening from a higher time frame perspective. So price sold off, and you can see in the formation of this weekly candle and the subsequent weekly candle, we get sell and then buy pressure in the market. And what we get left with in this specific candle is a weekly order block, because price sold off and created a bearish weekly candle. We then got buy pressure, and this became the last sell to buy. So we can now mark that as a weekly order block right here. So now we have context, because when price is retracing, we know we're coming down to mitigate this order block. And what we see next is something really interesting, because price sells off and we have this particular swing point right here, and we get a bullish close through the swing point, and we close above the previous weekly candle range. So now we have the formation of a new weekly order block right here. And in the same way we saw the 12-hour demand step in right here, we're now seeing weekly demand stepping into the market. So we have sell to buy, And in this candle here, we close above the previous candle's range. So now we can go back to our 12-hour price action and actually see what's going on. So we had a 12-hour order block at the low right here. We then have another 12-hour order block sitting right here. You can see it's sell to buy. We see a liquidation of the low, but this candle prints up, and then we get a confirmation of the order block when this candle closes the weekly range and closes above this down candle. So we can then take trades from the 12-hour order block, covering the swing low right here. And where's our next target? A continuation of the trend. So this then plays out for a 3.44R. So let's take a look at some theory before we go on to another example. Weekly candles represent the intermediate time frame between monthly bias and 12-hour execution when it comes to swing trading, especially using the way I swing trade. So I use them, one, for weekly CRTs, where we're seeing accumulation, manipulation above a weekly candle range to target the opposing end of the weekly candle. Or I use them when I see them forming support or resistance in the market to take longs or shorts from. So we get sell, buy, and then we can take trades in this area when they make sense using lower time frame price action. Most traders either trade too high, so they're just looking at the monthly candle, so they're missing opportunities, or too low, they're on the daily, the 4-hour, trying to trade swing positions and just getting chopped up. So weekly ranges in swing trading give us targets, but also context. So let's look at more examples. So if we go into USD CAD, we can see that price sold off aggressively. So we have these weekly ranges that we can use to actually make sense of what's going on from a higher time frame perspective. So very quickly, you see we have the formation here of a CRT, where we get a accumulation candle that is bearish right here between the high and low, and then price does the same thing that we saw in the last example. We get price selling off, liquidating all of these candle range lows, the external range liquidity in this area, then shifting bullish, and we go straight on to liquidate the external range liquidities at the high. So arguably you could have tried to enter trades right here. So that's one application, as we talked about. But what we get is something much more interesting, because we see sell to buy, weekly order block, price comes in, tries to go higher, and then we get a shift. And in doing so, we see that we're closing below certain weekly candle ranges. Now, this is a buy candle, sell pressure coming in, then price tries to go higher, and then at this low, we get a close below the weekly order block. So we can mark that as a weekly order block. So we have buy to sell. This weekly candle range closed below this bullish candle. So again, we have now supply coming into control of the market. And again, we can then track what's going on from a price action perspective. So we had highs being respected, trading through this swing point, and then we saw price sell off to close below the weekly order block. So now we have context. We can look for trades from either the fair value gap, potentially, that probably makes sense, covering the swing point, because we know we're going to sting in to the weekly order block from a higher time frame perspective and target lower. And then as an intermediate time frame, we can check back to see what's going on our higher time frames. So if we bring up the monthly candle, we then see this makes perfect sense, because the monthly candle has liquidated the previous candle's high. So this is a monthly liquidation. I'll just mark it there. We saw price come in and then close inside this monthly candle's range. So the most logical next step for price is to target the low of this monthly candle, which plays out perfectly. And we're using a combination of monthly thinking in combination with weekly order blocks to get into high probability trades. And if you just held this, covering the swing points, you can see this plays out for a monstrous 5-hour trade. So this is how you start to think about using the weekly candle range. One, check out my videos on AMD, because you can use weekly candle ranges to time high probability CRTs. But more than that, you can use them as timing triggers and execution points to get into higher time frame CRTs, like this monthly CRT or the 2-week CRT that we previously covered, and to see where order blocks on the weekly time frame are forming that you can trade from using lower time frame price action. So this is how to use weekly candle ranges. Identify the range high and the low after close. Wait for liquidations of weekly highs or lows. Confirm weekly candle closes inside previous candle ranges, and then execute on the 12-hour time frame targeting opposing weekly extremes. So my model is that I track and analyze 32 forex pairs, including gold, silver, and Bitcoin. I track 12-hour price action in conjunction with monthly, 2-weekly, and weekly candle closures. I'm swing trading, so it's just a matter of waiting for setups to form, waiting for context to align, and then executing. Once you get good at this, you can do it in 10 to 15 minutes a day. So if you like this type of swing content, please follow along, and I'll see you on the next one.